Hey everyone, welcome to episode 25 in my monthly series where I present to you my top 3 dividend stock picks of the month that are designed for passive income and where I'll give you a high level update in my own opinion, in my own words, of the overall stock market in the last month. If you're new to the channel, welcome. This channel, I focus on a long-term buy and hold income focused or income oriented investment strategy. So the primary objective of this strategy is really to generate relatively safe, consistent passive income forever. So we achieve that goal by investing in funds that primarily hold blue chip stocks and use income enhancing strategies like leverage and like covered calls in order to achieve that high income. So this strategy enabled my wife and I to become financially free, financially independent in our mid 30s back in December 2019. So this channel is really to show you how we invest for maximum passive income so you too could achieve financial independence as quickly as possible. So I'm Canadian, everyone. So most of the stocks, most of the funds I talk about on this channel are listed on the Canadian stock market. But since we primarily or exclusively invest in US listed funds or American listed funds in our retirement accounts in our RRSPs, 1 out of the 3 stock picks will be a US listed or American stock pick. So stay with me if you're American or outside of North America and you invest on the US stock market. The first pick will be for you. And if you're Canadian and you like my first pick, well, make sure you put it in the RRSP because there is no 15% withholding tax on the income from US listed funds in the RRSP. Also, don't forget to check out my previous monthly stock picks if you missed them. I do one every single month. And because a lot of those stock picks are still good right now, especially the ones in the last few months. So I actually have a specific YouTube playlist for all my stock picks of the month videos. So just check out my YouTube playlist. You'll quickly find them there. And I made the time to make other playlists as well and organize my video via those playlists. So whether you want to learn more about my investing strategy or you want to check out all my portfolio unveil videos, those are my most popular videos, check out my playlist because it's a lot easier to go through them there. So the monthly stock market update, it's time for the monthly update. So this month, or the last month rather, could be pretty much be summarized in one word, in my opinion: boring. Right? Boring. The markets are still close or near all-time highs right now. The Canadian market is especially doing really, really well. The TSX, I think, is over 22,000 now, or close to that, since the Canadian market is very heavy on energy and financials, and energy and financials are doing very well right now. Even on the US side, where it dipped last month or a few months ago, where tech really dipped, now tech is up a bit, or it's recovered partially, maybe not fully, but it recovered a lot. So also, you have the Russian-Ukraine war still going on, but there's starting to be rumblings of advancing peace talks. And as we could see, either way, the war didn't really impact the stock market that much anyway. So for me and other passive income investors, this is a really boring time, to be honest with you. It's hard to find great deals out there because mostly all sectors are doing really well right now. So this is the attitude, by the way, that you should have as a passive income investor who just buys and holds like me. It makes sense if you think about it, right? And I know many of you are realizing this because I'm seeing this attitude shift in our Facebook group, Passive Income Investing. By the way, join our Facebook group if you're not already joined. Instead of seeing posts along the lines of, what do you guys think of the recent news regarding blank? Or are you guys worried or concerned? That's one of my favorite ones, about blank. Instead of seeing stuff like that, I'm seeing more of, hey, is it only me, or is ENS trading at a discount right now? Or, hey guys, the market is a little bit red today, it's down. What are you guys buying? What's on sale? So I can't tell you how happy I am to really starting to see this shift in attitude, which I knew would happen eventually because it happened with me as well, right? It's only a matter of time if you transition to my style of investing. After 6 months, a year, you'll see that you're really no longer concerned with the fluctuations of the stock market. You're more concerned of finding deals which are better when the stock market goes down, which is why you're bored when the stock market is high. It's as simple as that. So we're not interested in predictions, trying to time the market, trying to find or figure out what the next Tesla or Amazon stock is going to be. We simply buy and hold quality companies indirectly, right, via funds and ETFs, not the companies directly. We don't buy single stocks. And we simply collect that very high passive income thanks to income enhancing strategies like covered calls, like leverage. So that's about it. So it's really boring, a consistent style of investing that is not really dependent on stock prices, but really dependent on time itself. So yes, it's pretty boring, and that's the point, right? And trust me, the longer you're a passive income investor, the more bored you will get. So get used to it. This is the privilege we have as income investors. So enjoy that free extra time, which is the ultimate commodity. Never forget that. So as usual, the 4 criterias for all my monthly stock picks. Number 1, I own it myself, or I plan on owning it in the near future. Number 2, the fund or stock must provide a consistent source of passive income. So it has to have a dividend or distribution. Number 3, the dividend or distribution must be relatively safe and sustainable. In other words, the fund needs to be designed to provide monthly income, even if the share price or the distribution fluctuates, right? So covered calls, of course, really helps make this a reality. Last but not least, number 4, the fund needs to have good value right now, either because the fund is trading at a discount to its NAV, or the sector or region that the fund focuses on is experiencing some hardship right now, so it's down. So without further ado, let's check out my stock picks for the month of April 2022. All right, everyone. Pick number 1 is a brand new one. Well, it's not brand new, but it's a new fund that I've recently discovered. Very, very interesting. So this is my US listed stock pick. It's CEFD, the E-Trax 1.5x leveraged closed-end fund ETN. So yeah, it's a lot of stuff, but we'll go through it. So the fund manager is UBS Group AG. This is a Swiss manager. The dividend payout is monthly. The annual dividend, and I'm taking the average of the last 6 dividends or last 6 distributions because it varies monthly. It's $3.61 a share. So again, this is the average if you're considering the last 6 dividends. So what is CEFD? Well, it's an ETN. Not an ETF, so it's an exchange-traded note, not an exchange-traded fund. I'm not going to go through the major differences. You could always look it up, ETF versus ETN, but basically it has a termination date. That's one of the major differences. So this fund invests in various closed-end funds, a bunch of different closed-end funds in the US on a leveraged basis, 1.5x, which means it's 50% leverage via an index. So it actually follows an index of closed-end funds. Really, really, really cool. And it pays a monthly distribution, but because it's an ETN, they actually call it a coupon, right? A monthly coupon, but we could say it's a monthly distribution. So the fee is 0.95%. I don't know if this is the total fee, if it's the MER or whatever it is, because it just says fee. So fee 0.95%. I don't have the details on the fee, but if we look at the stock price now, the 1-year high, 33.41, which would give you about a just under an 11% yield, 10.81. But right now, March 29 price, 26.89. So you get a nice yield of just under 14%. And of course, the leverage really, really helps, to be honest, with this one. So once again, a fund or an ETN that holds a bunch of closed-end funds on the US stock market actually follows an index base, and it uses 50% leverage. So here are the top 15 holdings of this fund. So I took this right off the website. I suggest you go on the website to really check it out. It's a pretty cool website. So as you could see, you might even recognize some of them. I know I recognized FAX, FAX, which is the US listed version of FAP. I also recognize JQC, which is a Nuveen closed-end fund, but you also have another Nuveen one here, which is literally an S&P 500 covered call closed-end fund. So you'll recognize a lot of these names. There's Eaton. Nuveen is a big closed-end fund manager. You'll have some BlackRock. So this fund literally holds a bunch, and this is, by the way, is the percentage, the allocation. There's like 80 or 100 closed-end funds in here. This is just the top 15. But as you could see, it's really, really well diversified. There's fixed income in here. I mean, some of them focused on, like FAX focuses on bonds, fixed income in the Asia Pacific market. You have BlackRock Corporate High Yield Fund, like the name says, focuses on high yield funds. You have in BlackRock Enhanced Equity Dividend Trust. So this focuses on stocks, right? Equity means stocks. You have an Eaton Vance one, Nuveen Credit Strategy. So that's fixed income, S&P 500. That's equity, municipal bonds. So you have a mishmash of equities, fixed income, all kinds of cool stuff in here. Really, really well diversified. This is why I really love this one. It kind of, like I'll show you in the next slide, it reminds me a little bit of River North, right? It's a fund that invests in multiple closed-end funds, but the difference is this one has it's more broad in exposure because it covers an index. So here are the last 12 distributions, right, per share. So as you could see, they're actually fairly consistent. I mean, they're about 25 to 30 cents most of the time, with a little bit of fluctuation. The first one of every year is always a little bit bigger. So this fund has been around for about 3 years or something like that, and they're really consistent monthly dividends, which I really like. So why is this a stock pick of the month? Well, basically the high yield, right? The high yield of about 14%, monthly payouts that vary but are fairly consistent, like we just saw, is obviously a big plus. I mean, we're income investors. Consistent high monthly payouts is what we want. And this is really a great way to capture the huge collection of closed-end funds that exist in the US. So in Canada, there's, split funds, by the way, are considered closed-end funds. There's very small closed-end fund market in Canada. The US, it's absolutely huge. So this is a great way to capture it all in one. It's like an all-in-one closed-end fund type fund, kind of, right? And the 50% leverage, really smart in my opinion. It helps boost the yield significantly. So 50% leverage, you might think that's a lot, but keep in mind, this is, it's so broad and it's quality, in my opinion, that leverage is okay if you're investing in quality stuff. So that's why there's such high yield, 50% leverage. A lot of diversification, right? You have equity, you have fixed income. So you have stocks and fixed income instruments, which the US is very strong on. Fixed income in Canada is almost nothing. But in the US, they have a lot of cool stuff, bank loans and high yield corporate bonds, and really stuff that have high yield, don't have like 2 or 3% yield, but have like 6 and 7. Add the leverage, and that's how you're getting that big yield. So really cool. Like I mentioned, very similar to Riv. It reminds me of Riv a lot, but it has higher leverage. It has 50%, where Riv, their mandate is a maximum of 33% across the board. And Riv is a little bit more active, right? They're selecting or trying to select which closed-end funds to include in their fund. They typically go after closed-end funds trading at discounts, but this one is really an index. It follows an index. So just a word of caution, a heat of caution here. This is a highly leveraged product and it's an ETN. So it's more volatile. So this should not be, I repeat, should not be a really big position or big allocation in your portfolio. Okay. If you're Canadian, put it in your RRSP. But actually, you could actually put in your TFSA or cash account, because I can't confirm this 100%, but I've heard from multiple people that ETNs do not have the 15% withholding tax. So if you can confirm that 100%, please drop me a comment. I can't confirm it myself because I don't have any ETNs in my cash or TFSA, but that's what I keep hearing. So it might be a good place to get high yield also in your TFSA and cash account. But personally, I invested $10,000 into this in my RRSP. Okay, so that's just what I'm telling you. It's about 4 or 5% allocation. I only intend to make it about 5% for now. We'll see what happens. Pick number 2. So let's go to my Canadian listed picks. Should be no surprise to you if you're following which funds are trading at discounts. It's ENS, right? It's the E-Split Corporation, one of my favorite split funds from Middlefield, which only invests in one company, Enbridge. So the dividend payout is monthly. The annual dividend is $1.56 a share. It's been that way for a really long time. I expect it to continue. So ENS is a split fund that only invests in one company. Enbridge, so it uses covered calls and leverage to enhance the yield and returns that Enbridge gives. So it's basically, if you're really bullish on Enbridge like I am, if you intend to really hold it forever, I would get ENS instead of the Enbridge company, or ENB basically, because you get a much higher yield. Management fee though, it is a fund, so there is a fee, 0.75%. I think it's fairly reasonable for what they do and the enhancement that you get, right? So when your high stock price, 16.19, would give you a yield of 9.64%. Right now, it's about 15.86, so it's not far off. So you might be wondering, well, why is it a stock pick if it's so high? I'll tell you in a second. So right now, you're getting a little under 10% yield on it, so 9.84. So points and reasoning. The main reason it's a stock pick of the month is because ENS is currently trading at a 5 to 7% approximate discount to its NAV, right? This is very rare, especially for a quality split fund like ENS. So what does it mean if it's trading at a discount to its NAV? It means that the stock price is lower than the NAV price. So the stock price, which is, if you would buy it now or look it up now, that's the stock price. It's lower than what it's actually worth. So the NAV is what it's actually worth. So this is very rare. It's a great opportunity to really invest in a Canadian dividend aristocrat, probably the king of dividend stocks. Enbridge doesn't need an introduction. I'm not going to try to convince you to try to invest in Enbridge. It makes no sense. It's already a legend. It's a legendary Canadian dividend stock, biggest pipeline company in North America. And yes, it's energy, but keep in mind it's energy infrastructure, not an oil and gas producer. I know I said that a million times. So it doesn't really depend that much on oil prices as much as a Suncor or a Shell or a BP, for example. So they've raised their dividend 26 years in a row, which is amazing, 26 consecutive years in a row. The dividend growth is so strong that I know for a fact, because I talked to him, the fund manager doesn't really need to write much covered calls on this fund to meet the distribution for the Class A shares of the split fund. So stay tuned. I'm really excited about this. I'm going to announce it now that in April, I have done, or I will publish, an amazing Q&A video with the guys at Middlefield, Dean Orico and Rob Lozon. And Rob Lozon is the COO of Middlefield. He's the guy who actually manages ENS. So I talked to him about this fund in detail. We talk about the covered calls, overnight offerings, by the way. So make sure to watch out for that video. It's coming in about mid-April. I'm very excited about that. So that's ENS. Really, really good pickup now. Quality. And hey, trading at a discount can't go wrong. Pick number 3 is DGS. So this is the Dividend Growth Split Corporation, another split fund, but it's from Brompton. So it's managed by Brompton. The dividend payout is monthly, of course. It's $1.20 a share annual, so it's 10 cents a month. So DGS is a very high yield split fund that focuses on investing in blue chip Canadian dividend growth stocks. Okay, so it's the main competitor to DFN, which is from Quadravest. So DFN kind of does the same thing and invests in the best Canadian dividend stocks. The management fee is 0.6, really reasonable, I have to say. The 1-year high stock price $7.48, which would give you a yield of a little over 16%. Right now, it's pretty close to that. It's at $7.32, which you would get 16.39%. So why is this a pick then? Well, first, let's just check out the portfolio and the performance. So I found this very interesting. So if you look at the portfolio breakdown here, and I'm sorry if it's a bit small, you'll see that unlike DFN, I'll talk about DFN in a second, it's a lot less heavier in the financials. The DFN is very concentrated in the financials, like 50% financials. Here it's 28% financials. Of course, it's the highest one, right? It'll always, any Canadian focused fund will be very heavy on the financials and energy, and that's the top 2 here. But I just wanted to show you the breakdown because it's very well diversified, better diversified than DFN. It's broader in scope. It even has some real estate. You could see real estate, consumer staples, materials, communication services, which is telecom companies. And it also has a 10% in, here it says 9.9% holdings in investment funds. I'll show you what that is in a second. I found that really interesting. 10% of the fund is actually allocated to another Brompton ETF that invests in the best global dividend stocks. So they kind of like put a little hedge in there. I wouldn't say if it's a hedge, but it's a little something different. It helps diversify DGS. I found that was a really nice touch. And here are the annual compound returns, by the way. So as you could see, the Class A share since inception, so I think 2007 this fund came out, so it's been a long time, it's over a decade. On average, it gives you an annual return of 10.2%. Really good. So the numbers don't lie. You have the preferred share, will only give you 5.4. The unit total, if you combine, let's say if you get half of Class A and half of preferred, so the whole unit, you would get a return of 7.1. But the Class A shares are really where it shines, right? That's where you get the most return thanks to that leverage, 10.2. So my key points and reasoning for this one, just like kind of ENS, the current NAV of DGS as of March 24th, that's the latest number, is $6.98. So this means that the fund is trading at a premium. Yes, it's at a premium, but it's less than 5%, which is very rare for DGS. Usually the premium is like 10 or 15% because this is a very sought after fund. So it's a good pickup now, in my opinion, because the NAV and the stock price are very close. Anything near 5% or less than 5% pretty much means you're getting it spot on, in my opinion. So DFN, on the other hand, is trading at a 7 to 8% premium. So the premium is a bit higher on DFN than DGS, and they kind of invest in the same thing. Great diversification in Canada, right? Less financials heavy, like I said, than DFN, its competitor, and it's more broad in scope. And the next point is I love that 10% allocation. And by the way, the 10%, it's allocated to an ETF called the Brompton Global Dividend Growth ETF. So it adds some really nice diversity outside of Canada. So that ETF is mostly 90% US and European dividend stock. So I found that 10% touch on that is really, really nice. And the numbers don't lie, right? The average annual return since inception, so inception means since the fund was created, is 10.2. DFN, look at this, 10.1. So it's almost nothing, but I got to mention it. But don't get me wrong, I love DFN as well. And in terms of dividend misses, we know that the higher risk split funds or the higher yielding ones do miss dividends. They miss 24 dividends out of 172. Really not so bad, I have to admit. Really, really good. So warning, just like the first pick, although this fund is very tempting because it's usually 15, 16, 17% yield, I consider this a medium to high risk split fund. So there will be possibilities of missing dividends, especially during strong corrections or crashes. So don't make it a huge percentage of your portfolio. I personally, you'll right now have 15K in it. You'll compared to 30K in DFN. So DFN I think is medium risk. It missed a lot less dividends. The unit NAV is a bit higher. This one missed more dividends, but the unit NAV is lower, so the yield is higher, obviously. So don't go crazy on DGS. Yes, the quality is there. It's all nice, good blue chip companies, but it's up to you on how to decide how much percentage to allocate to DGS. I do consider this a higher risk split fund. So just a word of caution on that. Thanks for watching, everyone. I really appreciate it. Please show your appreciation by hitting the like button, hit that thumbs up button. It's free for you. It takes 2 seconds and it helps the channel grow. So it's a win-win. Also, if you like this type of content, this channel is all about investing for passive income. There's stock picks. I got a lot of great content coming up. I'm always thinking of new content. So make sure you're subscribed and hit that little bell button next to the subscribe button so you're notified every time a new video comes out. You don't want to miss my new content. We also have a website. Make sure to check it out, passiveincomeinvesting.ca. That's where you could purchase my digital product, the ultimate DIY investing package, which is on version 3 right now. I'm very proud of this product. It's a companion tool, a reference tool to really help you build your own portfolio, whether you're a Canadian investor or an American investor. There's sample portfolios in there according to different investing styles, not just income, what I do, but there's also some growth and dividend themed sample portfolios in there. And it comes with lifetime updates, so you only need to purchase it once. So make sure to check out my website for all the details on this product. There's also a video there where I show from A to Z what this product is, so make sure to check it out. Also on my website, I offer right there on the homepage a one-on-one consultation service with yours truly, me personally. It's a 1-hour Zoom meeting face-to-face in case you want more personalized help, where I go over your situation, help you build a portfolio according to your own needs, answer all your questions, help you transition a portfolio. Whatever your needs are, I will do my best to help you. I love doing these sessions. I limit myself to 4 a week. They sell out very quickly, so I apologize for that. I know many of you keep sending me emails. I always miss the consultation. Well, I can't do more than 4 a week because I need the time also to create more content. So just look at the little message on the homepage there, right on top of the calendar, to get a status if the calendar is open or not. But I will let you guys know via YouTube community post and a Facebook post when the new appointments are open. Speaking of Facebook, make sure you join our Facebook group, which is almost at 10. We're almost at 10,000 members now and going up every day. So it's a nice little group where people post their questions, they put their portfolio, and we all try to help each other out when it comes to passive income investing. So make sure you join us there. We're also on Instagram. If ever you want to know a little bit more about our personal day-to-day life, you could follow us on Instagram if you use that social media platform. Don't forget, guys, the mission of this channel, my mission will always be the same. It's to help everyday, normal, regular working people to invest on their own in order to build their own stream of passive income to enhance your quality of life and one day become financially independent. So how do I always leave you? Make sure to continue staying safe, stay healthy, and of course, stay passive. See you next time.